it doesn't matter which your strategy in, making your money grow is, especially using the stock market to do that. You need to know what are some of the ways you can use, some of the indicators you can follow in order to see exactly, or to predict, or to be closer to 100% sure about when a stock will actually start running. All right. And there are many ways of doing so, So I obviously cannot cover this in just one single video, but I want to use something that happened today to give you two or three examples, because there is one way of using, there is one way of actually predicting or knowing for sure that a stock can go up significantly. One of that is using what we call fundamental analysis. A fundamental analysis is just looking at the company business, looking at the company industry, looking at the company sector, looking at the company numbers, the balance sheet, how cash do they have, how debt do they have, et cetera, et cetera. Are they paying any dividend? What is the outlook on the business they're doing? Is there any risk based on where the economy is going, what the politics, around the world is doing, et cetera, et cetera. That is what we call fundamental analysis, because you look at the basis, the core operating business and everything around it from that business and how it's going to impact the stock price. All right. Now, you also what we call technical analysis. Technical analysis is really about looking at the chart. All right. When you look at how, the candles are really depending on every single minute or every single hour, you have, a stick on a chart of a stock that gives you the indication that it's going up, it's going down. And technical analysis is another school of thinking, method or approach in analyzing stock, because stocks is using a lot of data. All right. You have the volume, you have a lot of things that you can use those data and build what we call indicators, such as the RSI, for example, or a moving average, et cetera, et cetera. But let's start with the simplest, what we call the upgrades, because when you hear something like this, I'm going to share with you, you actually can be pretty much sure that the stock will follow suit and jump. So today, if you look here, we have the best top 3 S&P 500 movers, and we have Occidental Petroleum, which gained 7.1%. And this is a stock that I recommended many months ago, even when it was trading at a 35. So if you were followed on that alert, all right, now you will be reaping almost more than 50% gain on the stock. Now, what is making this stock move today? First off, the first that, oil prices were gaining, but also the fact that they were an upgrade from analysts. Stifel says buy Occidental Petroleum stock and it could go up 45% from here. All right. Now, what you may not know in how the stock market works or how stock works, the money you and I put in the market as retail investors, all right, through 401ks, our pension funds, our 529 accounts, et cetera, we have investment firms, the BlackRock, the Invescos, the insurance companies also are part of that. And they are the one putting money into the market and give that money to the investment firms. Now, the investment firms then take that money and really start to try to, make that money grow for us, all right? And that's why they pay portfolio managers, financial advisors, et cetera, et cetera. But you also have analysts working for those companies, and those analysts are the ones who are working closely with the companies. They analyze the business. They do the fundamental analysis that I mentioned earlier. They go in conferences. They follow the balance sheet of companies. If there is a news impacting the risk aspect, impacting the growth aspect, impacting anything that has to do with the way the business is being operated today, and they try to forecast it with what is going to come in the next 3, 6, 12 months, 1, 2, 3, 5, 10 years. And based on that, they attribute a note. All right. The note is what we call the price target. And those price targets are what is going to actually give you an indication on where the stock is actually trading today in 6 months, in 12 months, in 2 years, in 5 years. Where can you expect it to be? Because these analysts already made the groundwork for you, the heavy lifting. It doesn't always work, but given my experience, long term, it tends to sometimes work, because trading today is pretty much done through algorithm. All right. So when you do have a stock trading like it is trading today around, 7%, it's because we do have somebody that call into the stock having a price target. Now, the price target has been given around $83 a share. $83 a share, it's literally 45% upside from now. All right. So all these algorithms that are built, set up, coded, computerized in order to follow news like this will then suddenly pick those up. And then you have other type of smaller investors that will just follow, especially if you have someone like Warren Buffett still buying this stock, and owning more than 10%, almost 14.5% of this stock. So that gives you a clear indication that maybe it's a good time to own this stock, even though it already ran, because it doesn't matter if you bought before the 7% or now that it ran 7%, there is still 45% to go. All right. So you didn't miss anything. And then it's kind of the same thing with this stock, Centennial stock, because I also recommend it and I own this stock and I've been calling on this for the last months. Today it gained 5% on a similar news. All right, it's been upgraded. Centennial Resource upgraded to buy at Stifel, the same company, because they made the analysis and they saw that, well, with the way oil sector it's trading now and what is going to happen in the next year, 2 years or so, there are high chances that this stock will still produce a lot of money. All right. And that's why they upgrade. So now the price target on this stock is around $12 to $13. I mean, $11 to $12. So that is also a significant amount of return to be made if you want to own this stock now. All right. So these few are just a couple of examples. And the bottom line is, when you look at, for example, the fact that this Ukraine conflict is putting a lot of sanctions into Russian oil, and Russian oil was one of the main suppliers of oil throughout the world, it kind of makes sense why oil will remain around $1 to $100 or $1 to $100 a barrel for the next, at least for the remainder of this year, and potentially for the remainder of the next 3 years to come. So at these prices, these companies are just cash cows. And in an inflationary time like the one we're living now, or times of recession, you want to make sure you hold some of these stocks that are going to produce you this passive income, because what you may not know also is all of these stocks, if not already the case, will soon start paying a lot more dividends. So you want to make sure you don't lose that if that is a strategy you want to move. So remember, price target upgrades, those are a clear indication that a stock might run. And even if you didn't, catch up, if you didn't buy before the upgrade, then you didn't miss. The only thing, to close the video, I'm going to give you as an advice is what I do. It's, if I want to jump on a stock like this, I will always wait for a little pullback, but you don't want to miss it if it doesn't pull back. So I will put a little amount of the money I'm willing to invest in a stock, let's just say 50% or 30%, and then wait for the pullback. There's always going to be a pullback because stocks cannot continue to go high indefinitely. All right. So when it pulls back, then you put the additional 50% or additional 30%. And even if it doesn't pull back, if it continues to go, higher, it's a confirmation that, well, the stock is really running. All right. So maybe if you lost 2-3% gain, we're talking about 45% gain. So you are still in the game. All right. So let me know in the comment section if this added value to you. And if it's the case, please consider giving me a thumbs up and subscribing if it's not the case. I will see you in the next video. Take care.